Today, we're diving into insights on 3 stocks to keep your eye on for a year-end rally. We're going to focus on 1 large cap, 1 mid cap, and 1 small cap. You'll want to stick around and check these out. So let's get started. Today, we're talking about 3 stocks to pay attention to if there's a Santa Claus rally. Just a quick explainer here on that. A Santa Claus rally is an upturn in the market during the trading week between Christmas and New Year's. It's not guaranteed to happen, of course, but if it does, one area to consider is stocks that are seeing strong insider buying. I'm going to put a link down below for the stocks with the most insider buying if anyone wants to check those out on MarketBeat. But today we are looking at 1 large cap, 1 mid cap, and 1 small cap. Let's take a look at this first one, a refreshing choice for an overlooked stock. It's Keurig Dr. Pepper. Chris, what is the opportunity with this one?
Hi, Lacey. Thanks for having me on. I see what you did there with refreshing choice.
Yes.
So Keurig Dr. Pepper doesn't get the same kind of attention as Coke and Pepsi, but there's a similar marketing story happening. By the way, are either of you Dr. Pepper fans?
You know, it's refreshing every once in a while.
Okay, we're big fans over here.
Yeah, right.
We don't have a lot of soft drinks in the house, but when we do, Dr. Pepper is probably the choice more than Coke or Pepsi.
Yeah.
Anyway, as the name says, so you've got the iconic Dr. Pepper brand, but it also has the Keurig brand of coffee, which we're big fans of Keurig over here too. But it also made a $50 million investment in last year in the Athletic Brewing Company, and they are manufacturers of non-alcoholic craft beers. I neglected to put this fact in my article, but that market was a $22 million market last year. It's supposed to grow to $40 million by 2040. So we're still looking at a very small niche market, but but Keurig Dr. Pepper has an investment in one of the big names in the sector. So that's something that is driving the current interest in the stock.
Thomas, if you would tell us on the other side of this, what are some of the key indicators or upcoming events maybe that investors should watch for when they're evaluating the future of the stock?
Yeah, right. So Keurig Dr. Pepper is really 2 stories. There's the soda story, then there's the coffee story. And as Chris was saying, the soda side's doing great. It's growing in alignment with Coke and Pepsi. To that end, I prefer Coke. Pepsi's good with a lime. I'm not a big fan of Dr. Pepper. All right. But for KDP, they're being hurt by coffee. Coffee demand and pricing is the big thing to watch for. The soda company has helped the companies. The soda market has helped the companies sustain growth, but at a lower pace than Pepsi and Coke. It's offset by coffee weakness. The global crisis that we shall not name caused a wicked backlash in coffee at home drinking that is now stabilizing. People went back to work and they stopped buying coffee at home. That's a big story.
All right.
So the major story for the stock will be when the soda and the coffee segments are aligned in growth. This will be a hot stock at that time. So what I see right now in the chart is a melt up following an overextended sell-off. I'd say that there's a high probability of a rally into the end of the year, but I'd be very wary of resistance at the $34 to $35 range.
All right, next we're talking about an energy stock. Honestly, I'm a little surprised this one made the list because it's been a terrible year to own energy stocks, specifically solar stocks. But here it is, ENPH Energy. The bad news is it might just be one of the sector's biggest disappointments because it's down over 60%. But it's on this list for a reason. So what is the good news?
Okay, so, first thing, I'll get this out there for any investors that are looking at what the market cap might be at today. I know it's slightly above what would be considered a mid-cap stock, but it was close enough for me to put on a list. So I put ENPH on the list. So by way of full disclosure, ENPH is a stock that I've bought and sold 2 times this year. So I have not been able to get this stock right. It's down over, 70% this year. There's really not a lot of good news for the stock right now, but maybe we can speak some into existence here. So this ENPH has a strong balance sheet. They have a product that has a unique selling proposition in the solar sector. The biggest problem that the company has right now is that the entire solar sector is really struggling. As it turns out that even though it's clean, even though it's green, inflation bites. And there's, consumers are not warming up to this sector, no pun intended, as much as people thought. And even with government subsidies, it's still an expensive proposition. However, once again, I'll say the company is fundamentally sound. At some point, the solar sector will turn around. That may be happening sooner than later if interest rates go down, as the conventional wisdom is that it's going to happen next year. And ENPH would be a stock that some investors could look at and say it's simply oversold at this point.
Yeah, to me, ENPH is one of those companies and stocks that should be doing a lot better, but just isn't for some reason. Yeah. I think here it's a combination of inflated expectations crashing into a wall of reality, causing a market reset. We were just talking a little while ago about the SPACs coming into the market with a lot of inflated expectations. And it's just kind of, same thing's kind of happening in the solar market. So it's bad news for those who bought the stock last year, earlier this year. If they're still holding, they're surely showing a loss. But like you said, Chris, it's got a solid foundation. There is a market for solar. It should be some rebound. The FOMC shift yesterday might be a catalyst for the entire market. But one thing I've been seeing too that kind of goes into your oversold value play is I've seen it on several analyst lists as a laggard or a dog for this year that is expected to rebound pretty solidly next year. The chart is in rebound mode. It should move higher into the end of the year. But I think that this is another rebound that could be capped at resistance if there's not another change in the fundamental outlook.
Great insights on that one. Here is a name that might be relatively new to traders. It's Beyond, and it used to be called Overstock.com, which might ring a bell. But Beyond saw a rally recently that stemmed from a bullish rating. How significant is this?
So this was my small cap pick in the article. The company is kind of hoping that its name changes, which links back to Bed Bath & Beyond, will be enough to help lift the stock higher because it's going to have, because the Bed Bath & Beyond name has some cachet with its core audience. In November, there was an insider that bought nearly 5,000 shares at a total price of around $100,000. The nature of Overstock.com is the fact that you're getting items at a little bit of a discount. And in this current environment, the stock to me looked at as something that you're going to have some retail stock winners, some retail stock losers. This looks like one that might be a retail stock winner as we get to the end of the holiday season, which is when the Santa Claus rally might happen.
Thomas, talk to that a little bit more, if you would. What milestones do investors need to watch for to kind of gauge the progress of this turnaround story?
Well, yeah, so this is an interesting name for me because of that strategic acquisition that Overstock made earlier in the year. It allows them to use the Beyond or the Bed Bath & Beyond platform and name. They're basically doing the same thing they did before, but with a bigger, better footprint. So given the situation with the economy and spending on home decor, we need to see stabilization within this industry and a return to revenue growth. And for this company specifically, some margin improvement and profitability. So the outlook for next year isn't that hot, but it could be another market that benefits from the Fed's policy shift.
Right.
Falling interest rates should reinvigorate the housing market and by extension, reinvigorate the home decor market. So I do want to point out, Chris mentioned that insider buy. That was pretty significant because it was done by Marcus Lemonis. He is from TV show The Profit. He also owns Camping World. He bought the shares because he was named chairman of the board. $100,000 to you and me is a lot of money, but to him, it's a small drop in the bucket. So it's important. It's a good thing to watch. I wouldn't read too much into it unless he starts buying more shares. If that happens, then I think that this stock would be ready to start rallying pretty strongly.
That's interesting because I saw the name and there was something about the name that sounded familiar to me, and I didn't make the connection.
Right.
And actually, that's a good point to make, because one of the really nice features about Market Beat is when you see the insider buys, you can click on a link and you can see the SEC filing with it.
Right.
And that's important because a lot of times a buy or a sell is linked to a specific action that a board
Right.
member or a company insider is required to take. I've noticed that specifically with a lot of selling action, which a lot of times I ignore selling action because you look at it and you say, okay, well, that was just something they had to sell. So it wasn't something that they chose to sell. But that's an interesting point. I hadn't made that connection, so I'm glad you brought that up.
Yeah.
All right, guys, you knew I was going to ask this. So out of these 3 potential rally stocks, if you had to choose one, what are you going with?
Well, I'm going to say that I would probably go take a third bite at the ENPH Apple. Not going to do it right now, but that would be the one that it's still on my watch list. And if I was going to look at one, that's the one I'm probably going to go after.
Third time's a charm, right? Hopefully.
Right.
Hopefully.
Yeah.
Thomas?
KDP is interesting to me because I enjoy consumer staples. It's got a good value dividend play. But like Warren Buffett and Charlie Munger say, don't own things you won't sell yourself. I prefer Pepsi and Coke. I actually already own Pepsi. So as far as picking from this list, I'm going to go with Beyond. I think the Fed shift signals, if not the beginning of the rebound in housing, at least the end of the pain. So Overstock may take another year or so to really get its traction back, but I think that it stands the best chance of providing significant returns.
All right. Well, it sounds like our viewers should keep an eye on insider buying and upcoming events for these 3 stocks we talked about today. Each of them has their own potential for a rally. So now the decision is yours. Which of these stocks would you bet on? Let us know in the comments. Otherwise, we wish you all a happy holiday season and we'll see you next time.